Good morning, everybody. This is Friday, the 7th of January 2010, and I want to show you what is happening on the EMD, which is my preferred market for intraday trading on this Friday. First of all, before I start the day, I go and have a look at the Hawkeye gearbox. And this gearbox has taken me 5 years to generate, and it shows me what tick chart speed the market should be set to at any day, and it changes day by day. As you can see, more volatility has been coming into the market, which you would expect after the Christmas and New Year holiday. So today we're looking at 160 tick chart. My favorite tick speed is the yellow. I find that far more robust than the fast, which is the blue speed. And I'm particularly going to show you scalping today. So I look at that, and now let me just move this chart back. You'd have to bear with me. I'm learning how to do all this because I'm going to be doing this on a weekly basis for you, if not a couple of times during the week. So this is my first run, so bear with me. I then look at the beginning of the day, and my three indicators that I have on at the moment. This is the Hawkeye heat map, which shows you the three speeds of the trend. For those Hawkeye users out there, you know that the trend has three inputs in it: conservative, normal, and aggressive. For scalping, I moved my speed to aggressive, but the heat map shows me what the speeds are doing on the normal and conservative time frame as well. This is my volume. This is volume which I use off my roadkill indicator. For those Hawkeye users out there who have roadkill, all I have done is just changed the trend dots to black, the same as the background, so it just shows me the volume on the second time frame. So 160 times 2 is what the volume is showing me here. And now I have volume also on my price bar here, telling me whether it's buying or selling volume or no demand. I wait for the first 10 to 15 minutes to go through the market. I want the market to settle down a little bit before I get in, and sure enough, my first indicator comes up at 9:39, 9:40. It's telling me that there is a position to enter. You can see that right at the top here there was no demand. Red volume came in, selling volume, plus the isolated high. The Hawkeye pivot appeared 1 bar later, and that started to drive the price down. And we had our first setup entry here. As you can see, the trend map, the heat map, has gone dark red, telling me that 2 of the trends have clicked to the downside. The volume has also gone red on the slower time frame, and on my time frame that I'm trading, you can see that the volume is red and the stops have swung. So there's my entry bar, that's my trigger bar, and this is my entry bar. I then go and put the Hawkeye grabber on, and the grabber is based on average true range, and that will tell me exactly how far I'm going to go on my money management. And what I'm looking for is my first exit to occur at the 9:10.70. Obviously you have to round it up, which is the blue line, which is 2 average true range move from my entry point. I'm trading 3 contracts, so I take 1 contract off there. I've achieved my first target. My stop all the time would have been at 1.5 times average true range, the dotted line up here, but that moves now that I've locked in 2 ATRs. My stop now moves to a close above the dotted line, or if it touches the green line, which is my entry. So I will then have a wash trade. So I've already locked in $200 on this move down here. I'm now looking to take another contract off when it touches the yellow, the sunshine area. It comes down, touches it. I've now taken my second contract off, and my stops have now moved. My stops now move to a close above the 2 line or a touch of the dotted line. And you can see on this bar here, it closes above the blue line. I exit. So I've now taken 300. I've now taken another average true range in here, and it worked out at $350 on that move down. I now wait for my next setup, and my next setup comes in here. As you can see, I've got dark volume on my green volume on my heat map, showing me that two of the trends have already clicked into the upside. My volume has gone positive on my slower time frame. It's already in here, and my trigger bar was there. Why was it there? Because I've got dark coming into the heat map. I've got neutral volume on my slow, which is quite sufficient for me. It's not telling me that it's against it. And I then go and move my ATRs onto my entry bar, which is here. And you can see that immediately it goes up and it touches the blue line. So I take one contract off. My stops are back right down here. It then goes up. It doesn't happen anywhere through here, but down on this bar here, it closes underneath the dotted line. I take my further two contracts out, and that washes itself just for a full contract. I then look for my next and my final position of the morning, and that comes up here. You can see that the heat map's gone red, the volume's red, everything is set up here, and I can take this trade. And if I go to the end of this chart, you can see that what I'm looking at is this, and this was where the real money was made of the morning. It came down here, it touched the second ATR, I'm in it, I take one contract off, it then comes down, touches the yellow, the sunshine area, I take another one off, so I've taken two contracts out. My third contract is free to roam. It can go wherever it wants to, providing it doesn't close above the previous ATR. So I'm following it all the way down here. It carries on. It breaks itself out here. There's no ATRs, so I bring the ATRs back on again to start counting. Comes back down, closes underneath there, then comes back and closes here and takes me out there. And that produced just over $600 on that move. So there we are, just a brief update to show you how to use Hawkeye in these markets. Please go to the website hawkeyetraders.com. We will be opening the trading room every Friday morning for you to come in and see us trading the markets live, or to ask us any questions. Thank you very much, and good luck.